Hey traders, welcome back to the weekly trading preview video. Today is Sunday evening. It's May 1st. We're starting out a brand new trading month today, or this week rather. And so let's get into what we're looking at trading for this week. It's going to be a busy week, I believe. A lot of stuff on the agenda. So the first thing that we always like to look at is our technical analyses. We do look at about 12 different technical indicators overlaid on a simple and exponential moving average from anywhere from 5 out to 200 days. Now, we look here on this weekly preview video on a weekly signal. Now, in the live trading room every single day, I'm posting a little bit more finite information. I'm posting the daily numbers, and we are looking at those from a support resistance level on a daily basis, especially on the days when we're trading our zero DTE strategies. But this gives us a little bit of a broader overview, maybe a 30,000 foot view, if you will. You can see that we are still above the 100 and 200 weekly moving average points, but we are below those on the daily numbers. And so we are still in a very bearish mode here. We'll talk about the price action in the marketplace just a little bit. We're looking right now, we had this very nice W being formed here in the marketplace. Looked like we were going to get a little bit of an inverse head and shoulders here, and that W was going to complete. There's the first leg, there's the second leg. Friday took all of that off of the table. We're looking down for somewhere, again, this is the E-minis that we look at. Somewhere around 40.30 would be support level. And that 4,200 level, which has been such a demarcation point for the marketplace. We've knocked on that door so many times in the last week and a half, and it just absolutely definitively broke down for us on Friday. So that 4,200 level is really going to be turning back into resistance level. What was support becomes resistance. 41.35 is the current level as I record this tonight. So we've got some big chop area that we are in right now. You know, I talked about this last week with regards to market levels. We have markets that consolidate and expand. That's really all markets do, is this they go through consolidation periods and expansion periods. And we've been in a consolidation period for a while. Now, albeit it has been in a downtrend, but we've really been bouncing around that 4,200 level for quite some time. And I mentioned that we were going to be looking for some 100-plus point moves. Well, we certainly got that. And we are now, I think, into that expansion period. So with obviously some news coming up this week with the FOMC minutes coming out on Wednesday, I would anticipate that we're going to have a fairly volatile week this week. Again, big trading room right now for just chop, which it means that, number one, we need to look for catching smaller moves. You know, we've had two 100-plus point rallies in the last week, and then we've had a 150-point free fall on Friday. And so to try to catch those moves is going to be hard enough. But to try to get all of that move is really probably an impractical goal. So we're going to be proactive with our zero DTEs. If we can catch a move, we will be very, very happy to take maybe a 40 or even a 50% or even a 40% capture rate on those as this week goes by. We'll talk about our positions here in just a little bit, but we had three absolutely picture-perfect trades going last week. We had our IWM credit strangle, we had our 4DTE SPY trade, and our 4DTE Q trade. They're on Wednesday. They're all three profitable, and they looked safe, and they looked like they had a lot of profit still to go. And I took them off on Wednesday, and there was some consternation in the trading room. Hey, why are we taking these trades off? They look amazing. And it was just out of a precautional sort of approach to understanding that this market could really move from a consolidation to expansion mode. It certainly did. Those trades would have been tough to manage when you see a 150-plus point move in the S&P. So glad that we took those off. We're going to try to be proactive again this week as well. When you look at monthly sector rotation, again, not a big surprise, probably, as you look at those areas. Energy continues to be my favorite area to trade in. Not necessarily because it is overvalued, because there is some obvious geopolitical reasons why the oil or the energy sector is so far outperforming other areas. What I think is maybe even more interesting to me right now is the commercial services area. Two names in particular stick out there to me. That would be Facebook and Google. Both of those stocks have been beat up a little bit, and I think that you're starting to see some buying power come back into those. So, for me, from not necessarily a pairs trade approach, but from a ratio trade, I would be looking to short more of the energy-related names and start looking at the commercial services area if you're looking for some opportunities to jump into things that are either oversold or short things that are either overbought. We look at the 1 week heat map. Obviously, the previous week was not great, but this last week was absolutely brutal, just absolutely brutal. You can see consumer services area right in there. That's the area. Talking about Google, talking about Facebook. Those are the areas that I'm starting to see a little bit of value in, but not a whole lot of green anywhere really in the heat map from last week. When you get a big sell-off like that, that's kind of what you would expect. We had a bad week the previous week, but this last week was just brutal for the marketplace. Just absolutely brutal. NASDAQ getting beat up quite a bit. Russell getting beat up. Pretty much everything across the board getting beat up quite a bit. Again, I think it's going to be an interesting week. It's going to be a potentially amazing week for us to trade. Well, that's all we want, really, is volatility as traders, and I think that we're going to get it this week. One of the things that we do look at is that put call indicator, that ratio, if you will. The put call ratio is above 1 when put volume exceeds call volume. It's below 1 when call volume exceeds put volume. So in other words, it's just looking at market sentiment, and we look at the market as being a bearish sentiment when the put call ratio is high, and a bullish sentiment when the levels are low. So again, above 1 would be considered bearish, below 1 would be considered bullish. You can see this is off of the CBOE data board. Really, whatever you're looking at, whether it's the total put call ratio, the index ratio, the index ratio on the SPX plus the SPXW, whatever it is that we're really looking at here, we're pretty elevated. We are pretty elevated on the put call ratio. A lot more bearish activity going on than bullish. If you take a look at some of the gamma walls and some of the put and call walls that you can see here going on, number one, you can see just a whole lot more activity going on the put side of the equation rather than the call side. Number two, you can see a lot more volume going on with the put side versus the call side. And number two, you can see that huge put wall right down here. Again, current level as I pull this from Friday's close on the SPX was 41.31. And there's a pretty big wall down here around that 4,000 level, which would somewhat coordinate with our sort of support levels that we're looking at in the E-mini contract. So again, a lot more bearish activity that we are looking at. Last week's expected move in the marketplace was 134 points. Well, we got that and then some. This week it's up to 168. Guys, I don't know if you track expected moves, but that's big. That is a huge expected move in the marketplace this week. That's obviously reflective of the past volatility that we've had. Obviously, Friday's data going into that number. And the fact that we do have FOMC on Wednesday coming up. So that's great for us as traders. That's all we're looking for is high IV. That's all we can ask for. We don't care what direction it moves. We just want it. So we've got it this week. We need to be careful. We need to be cautious with our trades. We need to be able to pull profits quickly and be comfortable with leaving some money on the table. But it's rare, guys. This number was down sometimes in the 45 range last year as we would trade. And we had it was like pulling teeth on some days to get a good 0 DTE trade up and running that had a good ROI potential. based on the risk that we took. Well, that's not the challenge anymore. So it looks pretty darn good going forward. As we look at the heat map, the technical analyses, you can see again, when we look at our technical indicators, again, stochastics, MACD with histogram overlaid there, and then the RSI inside of a Bollinger Band, yeah, you can clearly see that everything is bearish, but it does not really land in that oversold territory yet. Doesn't really look like we're getting any turns in any of these. And obviously we are at a very, very critical juncture here from a support level in this marketplace. We are just clinging, guys. We are just clinging to any last vestige of support here that we've had in the marketplace going back into March of this year. If we lose that, it is pretty much look out below. We look at the fear and greed sentiment reading. You know, that looks at all kinds of things, the stock price momentum in the marketplace, price strength, the breadth of the market, that put-call ratio that we talked about, junk bond demand, you know, moving money from stocks to bonds, market volatility. We look at the VIX, we look at the volatility in the marketplace, and then just the difference in returns between what the treasury markets are doing, what the bond markets are doing versus stocks. And all of that gives us a calculation here on where we're at on the fear and greed reading. We're definitely getting into the fear area here, very, very close to breaking into extreme fear. You can see the lower the number, the more the extreme fear we have. We've gone from 49 a year ago, 47 a month ago, 40 a week ago, down to 27. So that's interesting, because when we do get into extreme fear categories on all of those categories, remember that this is a contrarian indicator. And generally when we get down here around that 20 figure, you know, the fear is so darn extreme that that's usually the time to jump in. Baron Rothschild is, of course, the famous one quoted with saying you want to buy when blood runs in the streets, right? And so those extreme levels, they are actually contrarian indicators telling us to jump in. We're getting there. We're not showing that we're oversold at this point, but we're certainly moving in that direction. Things I'm watching for this week. Oh, my goodness. We are back, folks. We are back into full swing on earnings season. So you can go ahead and pause this video if you like, but my goodness, there is a plethora of earnings trades coming out this week. We're not going to trade them all. We're going to trade a few of them here and there, though. We're going to look for some opportunities. These are all of the trades that we're looking at on the 2nd, which will be tomorrow, Monday. Whole other list coming out on Tuesday of names. You can, again, you're taking a look at these. You can see when the earnings dates are, whether they are coming out before the market opens up or after the market closes, and then what the predicted volatility of those numbers are going to be. So you can kind of judge what the expected move might be. So again, just an absolute plethora of things. Herbalife, always interesting to trade. MicroStrategy is an interesting one. Lyft, Airbnb. There's a lot of interesting names in here that you could potentially pick up as some trading opportunities. And here's the last but not least part of that list for this week. Just, again, a ton of names of companies reporting this week. Etsy is always an interesting one to watch. So keep an eye on some of these. Again, if you want to pause the video or stop, pause, rewind, you can take a look at some of these names here, but there is a lot of stuff on the docket for this week. Back into earnings season, full swing this week, okay? Monday, trading ideas and market potential, market moving news. We do have the ISM manufacturing PMI number coming out a half hour before the cash open. That doesn't always move the market, but it might. Monday is always a busy day for us in the trading room. Of course, we will be live in our Zoom session. We'll be doing a 0 DTE index trade once again. We will be reinitiating our IWM weekly credit strangle, reinitiating our 4 DTE SPY trade, and reinitiating our 4 DTEQ trade. So Mondays are always a busy day for us. Now, We do have a potential bonus trade coming online on Monday, and that's a 1 DTE or an overnight index trade, because on Tuesday we've got 0 DTE days again. Very close to getting these all 5 days a week. So that gives us an opportunity, not just to get some more 0 DTE trades going, but to also get some more overnight index trades going, because again, we've got the opportunity here on Monday to put one in at the close that expires on Tuesday. So we'll be taking a look at that. So Monday should be a pretty busy day for us. Tuesday, activity-wise, we've got U.S. factory orders, month-over-month numbers coming out a half hour after the cash open. Again, that number generally doesn't move the markets too much, but it is potential market-moving news. Tuesday's core trading ideas. We do have a pairs trade right now up and running, and that's with O and another pair, Peak. That's right, O and Peak. We need to ratio that trade just a little bit. Start to nudge that a little bit more into the profit zone. We're very small on scale with that trade, so it should be fairly easy to start ratioing that and try to push that trade into the profit zone, help it along its way. PayPal, we're going to come back and redo a PayPal trade on Tuesday. Lots of premium in it, but we just needed to reset that trade after it just simply didn't work from a bullish standpoint at the early part of this year when the market started to tank and correct. Tuesday, we do have the ability to do a 0 DTE. Now, once again, let me go over this. We won't be in a live Zoom session on Tuesday in our trading room, because we will be in a live Zoom session in our scalping room. Every Tuesday and Thursday, we have a live video stream from our scalping room. So we will be doing a 0 DTE on Tuesday, but it will be a butterfly or a broken wing butterfly. These are trades that are very nice setups from a risk reward standpoint. A little bit lower maintenance trades. You don't have to stare at them all day long. You don't have to worry or fret about them all day long. They are trades that don't work very often. They only work 15 to 30% of the time, but the risk reward ratios on them are so fantastic. Again, we don't really ever put much more than maybe lunch money in one of these trades on Tuesdays and Thursdays. So it's going to be a very nice complement to the 0 DTE trades that we do on Monday, Wednesdays, and Fridays, which, as you know, we can make thousands of dollars a day on those trades, but you got to put up a lot of capital to do those trades, and there is some risk involved. We have to manage those trades very, very closely. That's not going to be the case with our Tuesday, Thursday bonus trades with 0 DTE, okay? We don't have a Thursday 0 DTE coming up just yet. Those will start next week. So, and then again, obviously on Tuesday, we will be in the scalping room all day long scalping. We'll be working on that. For our Wednesday trading session that again, one other thing on Tuesday, because we do have 0 DTEs on Tuesday, it'll give us once again another opportunity to do a 1 DTE overnight index trade. So once again, we'll be having a lot of activity here in the trading room on Tuesday. That will obviously expire on Wednesday. Wednesday's trading session, got some stuff coming out, obviously big day for us news-wise. We've got crude oil inventory numbers coming out 1 hour after the cash open. Now, we do have our current oil trade that we use the USO on. We've still got that up and running here, and we've got, I think, 12 days left in the put leg. We've already maxed out the profit on the call leg. That expired for us on Friday. And so just depending on how price action works with the USO on Monday and Tuesday of this week, we might leave that trade in place until crude oil inventory numbers come out on Wednesday. And that would maybe help us give a little bit of visibility to where we might want to put the call leg back in on that trade. So one way or another, we're going to be working on our oil trade this week, and Wednesday may be the day that we do that. Okay, U.S. international trade numbers out an hour before the cash open. The big news, of course, on Wednesday is going to be that FOMC minutes release and the subsequent press conference. That comes 2 hours prior to the close. where we'll get the FOMC minutes released, and then a half hour after that, so an hour and a half prior to the close, Fed Chairman Powell will be speaking at the press conference. We try our darndest on Wednesdays to get a double dip. We will try as hard as we possibly can to get 2 0 DTEs in this day. We'll try to get one going right out of the gate as the market opens up on Wednesday. We're going to try to take it off as quickly as possible. Even if it's only a 20-30% capture, we're going to try to take it off. And then we patiently wait until the FOMC minutes come out. We patiently wait until Powell starts to speak, and then we go at it again. 0 DTEs have been one of our very best days for trading 0 DTE strategies. Or excuse me, FOMC days have been one of our best days for trading 0 DTE strategies. And then again, obviously, we will look to add to potentially our oil trade. One potential bonus trade that I am going to potentially look at here on Wednesday. Yeah, I just said we got a ton of earnings trades coming out. So we're going to see what we can find on Wednesday, either a pre-earnings or post-earnings report that we feel like we could do maybe a reversion trade, something that might be reverting back to its mean, whether it's down or up. We don't really care, but we're going to take a look at that. So Wednesday, once again, should be a very, very busy day for us. We get into Thursday, and we got jobless claims coming out 1 hour before the cash open. We've got all the softs reporting. We've got corn, wheat, soybeans numbers out 1 hour prior to the cash open. We haven't had any softs in our model portfolio for a couple of weeks now. And so, again, depending on what we get price action-wise here, we might take a look at those. Nat gas numbers are going to be out 1 hour after the cash open. As you guys know, we have a massive nat gas trade on right now that is looking to give us better than a 100% return. That trade just continues to look better and better and better. We're going to try. We got 3 months left in that trade, so we've got some time to still generate some additional cash flow with that, and we will continue to work that trade. But we obviously want to see how it gets affected by those nat gas sales numbers. Core trades for Thursday, we do not have, that is incorrect, we do not have a 0 DTE butterfly trade this Thursday. Those are not quite trading yet. Those will be trading next week, but got a little bit ahead of myself there. No 0 DTE butterfly trade on Thursday, but we'll be looking at those on next week's schedule. 5 days a week for 0 DTE trades. But we will be scalping all day long in the live trading room. Again, one of the things that we'll probably be looking at on Thursday is a soft trade. Corn, wheat, soybeans, something along those lines. So that's probably going to be our core trade for Thursday. Obviously, we do have, once again, a potential to do a 1 DTE overnight index trade on Thursday. So we'll look to put that on as well. And then finally, last but not least, Friday, got U.S. unemployment rate numbers coming out 1 hour prior to the cash open. So that's non-farm payroll numbers that we're going to be basically looking at. Non-farm payrolls can absolutely move the marketplace. So we'll take a look at those. That might be a market catalyst for us on Friday. Obviously, Friday is going to be a 0 DTE index day. Friday's also options expiration. That's a pretty big day for us, so we try to focus as intently as we can on that 0 DTE. We may get a double dip on Friday. Sometimes option expiration can give that to us. Sometimes it doesn't, but we'll see how it goes. And no potential bonus trades for Friday as we wind up the week. Okay, let's take a look. Let's take a look at our updated results for all of our main strategies. Our 0 DTE, 4 DTE, IWM credit strangles, pair of trades, bear market trades, and butterfly results, as well as some scalping that we do on Tuesdays and Thursdays. So taking a look at our numbers on the 0 DTE, let's start with there. First of all, our 0 DTE numbers year to date, we have now had 50 days of 0 DTE opportunities, 82 total trades taken. Of those 82 total trades taken, 80 have been winners, Only two have been losers. Remember, you can, as a member of our program, if you go to the top of our Discord channel and you click on the pin, we have a link to every single recorded trading session that we have ever had. So you can review every single one of our 0DTE trading sessions. If you want to know how we dynamically trade 0DTEs to have such success, well, there you go. There's an extensive library of every single day that we have ever traded in. So 0DTEs, I couldn't be any happier. They've just absolutely been an absolute home run success for us. 4DTE, SPY, and Q trades. We booked another loser last week, so we're now at 71 wins and 7 losses. It is interesting. Last year, 2021. A 4DTE was much easier to trade than a 0 DTE. A little bit more trending rather than consolidating going on in the marketplace, and it was a one-way trend for most of the year, up, right? That has definitely changed this year. The 4DTEs are a little tougher to trade than the 0 DTEs, and so we need to exit those a little quicker to manage those, and that's probably going to increase the loss numbers on that. But we still have good positive expectancy with those trades. You're just going to have probably a lesser chance at getting out at a winner when you got to be stuck in something for a week and the market's doing what it's doing. RIWM credit strangles year to date, and we're up to 17 opportunities now. We've done 17 total trades. That's again just a function of the great ROI, or excuse me, the great IV potential that this market gives us. Last year, probably once every 5 weeks, 4 weeks, we would just simply skip the IWM credit strangle trade because the premium just wasn't there. We couldn't get the return that we were looking for. That certainly has not been the case this year. 17 total trading opportunities. We've been able to trade all 17 of them. And wouldn't you know it, all 17 of them so far have been winners. That's going to end. That streak's going to end at some point. But boy, it's sure been nice for us this year. And when you take a look here in just a minute at how volatile this week has been, how scary the movement in the Russell has been this week, and you see that we still came out just absolutely beautiful on that trade, you'll see why it is one of my absolute favorite trades. Pairs trades, we've done 16 total trades so far year to date, pair trades. 15 of them have been winners. We haven't had any losers yet, but we do have one trade right now that is open and working. That's the peak trade and the O trade. And that's the trade that we're going to be working on this week to race you a little bit. We did get one more bear market trade in over the last week, and that pushes us to 67 winners, 3 losers over about a 3.5 year period there on that. We can't find those trades as readily as we would like. It would be nice if we could do one of those every day. But when we find them, boy, they are sure nice setups. Our Tuesday, Thursday 0 DTE butterflies. Now, we haven't had a lot of chance at doing these. We've only done 2 of them. Obviously, this Tuesday we'll get another one under our belt. And, you know, it's nice. Obviously, we've started off well, 2 winners and 0 losers. But we do expect, again, that these numbers are going to come in somewhere around only 30% of these being winners. That's the nature of a butterfly. There's nothing inherently wrong with that. That's how they work. Because, you know, ideally we should be risking $40, $50 to make $200 to $500. So the risk reward ratio makes sense from that standpoint. The average profit I'm not going to try to keep a rolling tab of these. I'll just look at our last one that we did, which was the very last butterfly that we did last week. And we put in about $500, made about $65 out of that, something like that. About a 14% ROI on the trade. It was a pretty darn good trade for us from an ROI perspective. Again, never going to get really rich dollar-wise on a butterfly, but it is a very, very nice diversification and a very nice strategy complement to everything else that we're already doing. So it's just another way to diversify our risk-reward ratios, our strategies that we are using. Scalping results from last Tuesday's Thursday. Tuesday had a pretty good day, brought in about $1,000 profit. Thursday, horrible, 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 horrible day. Everything I could do wrong, I did wrong. Well, not everything. I just did two things wrong. Over position sized. Went to 5 contracts instead of 1 contract, which we usually trade on the E-minis. And ignore my stop loss. Rather than taking action on my stop loss, I let it run against me. So very, very expensive lesson for me on Thursday. We'll see if we can get a couple $1,000 back in our pocket this week scalping and try to move that back into the profit zone. I had about 17,000 of scalping profits year to date. Obviously gave that back and some on Thursday. So we'll try to actually follow our scalping rules this time and see where that takes us. Asymmetric trading system. Oh my goodness, it's just lovely. It's just absolutely lovely. We absolutely just killed the markets last year. We're beating the markets this year. How awesome is the asymmetric trading system? How lovely is it to see the markets just absolutely getting walloped and you don't even have to worry about your portfolio. Barely even budges. It's been such a nice thing this year. And so again, I would anticipate that 2022, we will meet our dual objectives once again, which is A, beat the market return, B, do it at less risk. So that's a little bit of an overview of where most of our major focus strategies are in terms of results so far to date. Bonus trading, one of the things that I loved was getting to work with Jim Rohn for a little bit before he passed away. What a great man. Just a great, great man. So much wisdom in him, and he left an indelible mark on me. And so I did leave a little bit of training for you guys in the bonus training channel from Jim on success leaves clues. And just to, your mental attitude towards things and how important that is as a trader. It's so critical that we enter our trading with the right mindset, because that is what drives everything. So check that out when you get a moment. Contacting wise, support wise, guys, please, we are putting up training videos every single week on the YouTube channel. If you have not subscribed to it and hit the notifications bell, if you've not subscribed to it, hit the notifications bell, please do. Almost all of our training is on the YouTube channel and it's free to you. You can access it at any time. You can always reach me on my Twitter account. We try every day to do a quick recap on Twitter and post up our 0 DTE results for the day. So you should be following me there. You can always DM me there. That's an easy way to get a hold of me. If you want to do a one-on-one Zoom session with me, you can schedule that right here at this Calendly link. And I do have a personal email. This goes straight to me. Doesn't filter through anybody. Goes right to me. And we can chat about anything that you'd like. Now, did add our Facebook group to it. We have a private Facebook group that we have now opened up to the public. And it's a Facebook group that we haven't really done much with, but I'm going to try to start posting our trades in there as well. Give you guys a little bit more information about what we're doing and how we're doing it. And then if you have questions and you want to create a little bit of a community and ask things that we can answer, we're happy to have you involved in that as well. There's an asymmetric trading system that we obviously love. You can check that out. There's a 2 free week link right there that you can have access to that. Our live 0 DTE trading room, there's a link right there that you can have a free 1 week access to it. And then our scalping program. We do scalp every Tuesday and Thursday. We broadcast a live feed of that, and you can check that out as well. So let me know if you have any questions, guys. I'm always interested in hearing from you. And as is always the case with my good buddy Zig Ziglar, you can get everything in life you want if you'll just help enough other people get what they want. I hope this has been a helpful tool for you guys to understand either A, what is going to be happening in the markets this week, and B, what we as traders are going to be looking at doing. So have a great, blessed week, guys, and we will see most of you in the trading room tomorrow morning. Take care.